October, November 2015, 2-hour paper, 100 marks. Exam technique, go to the proposed timetable, look for an easy question. Okay, question 1, creditors. 2, bank recon. 3, financial position. 4, the club question. Okay, they're all round about 24 marks. Okay, the only question that I would say is easy here is question 2 because it's 20 marks. Right, so if you want to build confidence in the exam, start with something that you can do and that you can do easily. Right, so I would definitely start with bank recon here. Okay, that'll be my preference. So I go to my bank recon question. There's it, question 2. What do they want? Well, they want everything. They want the receipts, they want the payments, they want the T account, and they want the reconciliation statement. Okay, I didn't open a file for this. Let's quickly create one. FAC1502 May, June, no, October, November 2015. So question 2 is the bank recon. They want 2 things, cash receipts, well 3 things, cash receipts journal, and they want the cash payments journal. And we're obviously going to have day, details, and bank. Same thing on this side. So that's the first little bit that you need to draw up. I'll then have a T account for bank. And then the bank reconciliation statement is separate. That's external records. Bank reconciliation statement for the year ended, I'm just going to write bank reconciliation statement, that's good enough. Okay, obviously write in the name of the business and all of that. Bank reconciliation statement. Right, then we'll have debit and credits. Right, you always start with balance as per bank statement because you can't change that. Right, and that's it. And then you'll obviously have a balance at the end, and it should balance with what you have in your books. Okay, so go to the question, have a look at what they've given you. Right, balances. Bank account general ledger favorable, first of the first, that's opening balance, 1752. 1752 favorable, first of the first, balance brought down. Bank statement unfavorable. If it's unfavorable, it means you're owing the bank. Unfavorable would be a debit balance, so that would be 432. Okay, so we've looked at that now. Subtotals, this needs to just go here. Totals. Receipts 24,480. Payments 22815. Okay. On comparing the cash journals with the bank statements, debtor P paid an amount owed to him directly into the bank account. That's a direct deposit, goes to the cash receipts journal. P Pinto. Okay, how much? 600. Okay, next. The bank erroneously debited Imperial's account with a check drawn by another client of the bank. Bank error. Okay, they erroneously debited our account, so our account will go up when they say sorry and fix it. So 1450. Yes. 1450, bank error, bracket incorrect debits. Right, tick that, tick that. Check received on 17 January from E, a debtor, was returned by the bank. That's a dishonored check. 218 CPJ. Check RD. The following transactions appeared only on the debit side of the bank statement. adjust. These are adjusting journal entries. Service fees and interest on bank overdraft. So service fees, interest expense. Service fees 45 and 32. Debit order for the monthly rent appeared on the bank statement, not in the relevant cash journals. The debit order is a payment. This is for rent. Rent expense 3,800. Tick. Sales entered into the cash receipts journal on 31st January was only deposited on the 4th of Feb. That's an outstanding deposit. Outstanding deposit of 1184. Right, the following checks were not yet presented to the bank for payment. Okay, this date looks very old because we're sitting in 31st January 2015. Okay, so January, well, from that date to January, that would be 2014. So that was last year. Okay, is that greater than 5? Is it greater than 6 months? Yes, it is. Okay, so it's a stale check. Right, so this 430 would be a stale check.
If you say check RD, will they mark it?
No, they won't. They'll mark the amount right. I don't know if they give marks for the description. They might. 430. Okay, telephone and paper, so stationery. Telephone and stationery, these are checks were not presented for the bank for payment, so that's outstanding. Outstanding checks. Okay, number 380, 380, and 394. Okay, so 1100 and 750. Right, and that's it. So now sum up this side, sum up that side. This is a receipt that will increase your bank. Total receipts, CRJ. Total payments, okay, and then balances account off. This side's bigger. This side looks bigger. Slightly. Let's just check though. Yes, it is bigger. Slightly. Okay, so this minus that gives you the balance brought down. Carried down, brought down. Then obviously balance brought down equals that figure there. Okay, and then this should balance if it's done correctly. Sum of this side looks bigger. Okay, so that side, and then this amount minus the sum of all of those figures gives you 352. Yes. Okay, so balance as per the bank general ledger account. Right, and you want to see this balance with that. Save. Right, that's question 1 done. Well, question 2 done, the first question. Okay. Great, so question 1 now, we're just going to go back to the beginning and just look at these questions in order now. October, November 2015, question 1 is out of 29 minutes, 24 marks. Always look at the required first. I can see here they want 2 things. They want the creditor's control account, which is a T account, and they want the list of the credit balances. So we need to draw that up. A big T account. Creditor's control. Okay. And then adjusted list of credit balances. Okay, so list of credit balances, right, or creditors balances. Creditors balance. Okay, this is basically what they call the creditors ledger. They should have just called it that. Okay, creditors ledger. Creditors ledger. Okay, so list of your individual creditors. Right, so if we go back to the question, we need to look for information that pertains to those two things. Right, so the first bit is obviously your easy marks that you can get easily. You would have had a balance here and a balance there. Balance beginning of the year, brought down. You had two amounts, debit of 250 and credit of 34,515. Okay, that's the simple bit. Then you had ledger. The net total of the list of balances was that, which is obviously the difference between those two amounts. Okay, you can check it on the calculator. 34,565 minus 1030, what do you get? You should get the same amount.
Minus what?
This minus that. 33,535, yes. See, there's it there. So they gave you the net amount. These two amounts subtracted. So I'm just going to put that in. 33,535. 33,535. 33,535. There's the figure. Okay, so there's my balance, net balance. That's what I started with. Okay, the one amount, the debit minus the credit minus the debits. Okay, then you've got the owner requests that you investigate the balances in the control account because they don't match. Okay, so your investigation finds the following. Right, the creditors column in the purchases and purchase returns journals were undercast by this and that. So undercast meaning too low. So if it's too low, your purchases need to go up. So purchases need to go up by how much? 3,850. And your returns returns need to go up by 1,500, yes. Okay, that's that one complete. Right, number two, the creditors column in the cash payments journal was overcast. Overcast meaning too high. Right, so that means your payments were too high. So if your payments are too high, you process too much. So payments would have gone on this side, which would have debited your creditors, right? So it needs to go this side because it's too high. So bank, asterisk, overstated. Okay, CPJ or CRJ now, because you would reverse it out. Okay, it will probably go general journal. You don't really have to worry too much about the general journal, purchase returns journal, all of that. It should all go to general journal if you're fixing it. Okay, so this is 1.5. Right, then you've got an account of creditor with a credit balance of 6.3 omitted from the list. Okay, omitted from the list means adding to the list. Add a missing creditor. Right, so if I'm adding a missing creditor to the list, it's a credit balance that's going to increase my liability, 3,600. Okay, you're adding it to your list. Next, number 4. An original credit note received from B for 285 was recorded correctly in the purchaser's returns journal. Purchaser recorded correctly, so it was right in the journal, but inadvertently posted as 825 to that entity's to the entity's account in the creditor's ledger. So the ledger is wrong. Okay, so fix the ledger. Incorrect total. This is 0.4. Yeah, the difference, but now we just need to check. This was for what? This was for a return, was it? Yes, purchases returns journal, posted as that. So the return was too high. If you reverse the return, you're going to add more creditors here. Okay, so the difference is 540, yes. Okay, a discount of 157, which was received from B settlement of that account, was not recorded in the account of B in the creditor's ledger. Okay, so not recorded, this was a discount received, so we need to record that. Missing discount received. Okay, so the missing discount received would have subtracted this or make it smaller, so 1570 minus 1570. Okay, it was missing. We had to subtract what we didn't show. It was not recorded in the books. Right, the debit balance of 1030 in the creditor's ledger was in respect of overpayments to creditors. Overpayments meaning they overpaid us. If they overpaid us, they become our debtors. Or other way around. We're overpaying them. Okay, so if you overpay your creditor, they actually become your debtor. Does that make sense? Okay. This was for 1,030. The amount that includes the opening debit balance of that in the creditor's control account must be transferred to the debtor's ledger. The creditors have agreed to this transfer. Okay, so we're moving a creditor with a debit balance to the debtors. Okay, so you would then credit this transfer. Okay, and how much was the transfer? 1030. Right, an electronic payment of 65 to a creditor was recorded as 56 in the cash payments and posted as such to the general and creditor's ledger. Okay, so we need to fix both. Okay, do you agree that the payment was more than you processed? Do you agree? Yeah. The payment was 6.5. You only processed 5.6, so you're missing a bigger payment. Okay, so bank, CPJ, incorrect payments. Okay, the payment was supposed to be 6.5 minus 5.6. 900. Okay, and they told you that it was also posted as such to the creditor's ledger, so that was also wrong. So we need to process the payment. That was for point number 7. Okay, so subtract 900 here as well. Minus 9 there. Okay, the credit balance of M4 that was recorded twice on the list. So minus one amount. Okay, so you need to take off one amount, minus 445. Okay, it was duplicated, so get rid of one extra figure. 9. The purchase of merchandise from A for 145 was recorded correctly in the journal, but was posted to the wrong side of his account in the creditor's ledger. Okay, this was a purchase of merchandise. So if you're buying merchandise, you were supposed to add to his account, but you recorded on the wrong side, meaning you would have processed a payment, not a purchase. So we need to fix that. Okay, so we need to add the purchase not captured, well, captured incorrectly. Okay, this is point number 9. Okay, so point number 9, we need to add back. So we need to add double because we need to reverse out the incorrect amount. So 1450 times 2. Okay, because he bought from us, but we actually subtracted from his account. Okay, so we need to add back twice as much. Right, we need to add back the mistake and then process the correct entry. Right, 10. It was noted that there were credit balances amounting to 1855 that appeared in the debtor's ledger. Disclosed that the balances were with respect to transactions that were concluded with creditors. The experience book you opened these creditors' accounts in the creditors' ledger. The creditor's control account was, however, not affected by these incorrect entries. Okay, so your creditor's control wasn't affected, but your creditor's ledger was. Okay, it was noted that there were credit balances amounting to this appeared on the debtor's ledger. Further investigations showed that these balances were in respect of transactions that were concluded with creditors. Right, so here we've got a debtor with a credit balance. The inexperienced bookkeeper opened these creditors' accounts in the debtor's ledger. See, that's wrong. Okay, so you'd remove them from the debtor's ledger and you would add them to the creditor's ledger. Point 10. 1855. Okay, and then the last one was the totals of the journal debits and credits for creditors were 1.3 and 3.6 respectively. Okay, so journal debits, journal credits. Okay, so the journal debits were how much? 1.3, and the journal credits were how much? 3.6. Okay, and then you would literally balance this account off, and you would sum up all of that. Okay, so net balance after adjustments, add up all of this. Okay, these were the negative amounts, the rest were positive, and then this side equals sum up all of that and that. You can see the side's bigger, so I want that side on both sides. This minus the sum of all of this gives this. Okay, see it didn't balance. Okay, right, you get balance as per the balance brought down, carried down, and then you have balance brought down. Okay, and you can see the missing figure here minus this is 1030. See? Okay, so there was a problem with this question. Okay, and that's why in the solution here, right, point number 6. If we assume this must also apply to the creditor's control account. Okay, so point number 6. Here's point number 6. Okay, if this must also apply to the creditor's control account, then it balances. Okay, because this was a debit balance in the creditor's ledger. Okay, so it wasn't only in the creditor's ledger, it would also be in the creditor's control. Okay, that's my assumption here. Right, and that's why I put that in. So if I put this here, okay, right, then this is going to be equal to, this was 1300, 1030. Hold on a sec. Back. Ooh, back. Okay, what was my balance here? It was 40540. Yeah, that's right. That was the balance that I had here. Oh, okay, so this was fine. I think I did process that. Yeah, I did process that. Okay, so this was correct. That's the right balance. Okay, it was this that I missed, which was the 1450. Where is it? Point number 6. Point number 6. There's it. Point number 6. Okay, these I should have highlighted both of these. Okay, so these 2 points are the points that we need to look at. So I've got this here. There's it there. Okay, we've got the 1030 here. I just need to also process that through to the, so point number 6, point 6. Okay, transfer debit balances for creditors. Okay, so if you transfer debit balances for creditors, okay, you're going to credit this account. So credit the creditors, and then you would debit the debtors. Okay, and that's why you needed to insert the 1303 here, and then if you sum up all of this, then you get the 40545. Okay, so it was just, yeah, I had that initially, I just didn't have that. That was the missing figure. Okay, then the solution is in line with what we did previously. Okay, it was just point number 6. Point number 6 required, let me just label this point 6. Okay, that one point you had to assume that it was not taken into consideration in terms of the creditor's control as well as the creditor's list, transferring the balances through, and then it balances. Okay, you get that balance there and you get that balance there. Okay, that's question 1.
Okay.
Alright, so you did pretty well. I saw lots of ticks there. Yeah, it looks good.
leave a whole Sunday.
Shame, man. Yeah. Okay, it can be quite challenging, so let's have a look at it. Question 3, 31 marks, 37 minutes. Always, always, always start here. What do they want? Statement of financial position and prepare only the note in respect of property, plant, and equipment. That's it. They only want the note. Total column can be omitted. Okay, so prepare the statement of financial position. So it's actually very similar to the other question we saw. Question 3. Statement of financial position, assets, non-current and current, gives you total, okay, and then we'll have equity and liabilities, equity and then liabilities, non-current and current. Okay, so now we need to look at that. And then we've got the PPE notes. Okay, so again, you remember the formats. Balance slash carrying value. Carrying value is actually better because it's cost minus accumulated. What was the year here? 31st October is the end, so 1st of September 2013 will be the beginning. 12 months back. Cost, accumulated depreciation, then you'll have additions, doesn't matter which order this is in, depreciation, disposals. Depreciation. Okay. Alright, and then you'll have the same thing at the end of the year, but it'll be for the end. So October, 1st September, so 31st October, or I think it's 30 October, 31st, no, 31st is right. October 2014. Okay, that's a total. That's a total. Right, so that's layout, that's formats. Okay, that you need to study, that you need to know, okay, going into the exam. Right, once I've got my template, then I get my easy marks. Okay, so go back to the question, get all the easy marks. Land and buildings is an asset, I need it. Okay, so it's going to go here. Vehicles is also going to go here. Okay, the land and buildings at cost, that was 7/9. What date was this? There's the date. 31st of October 2014. So that's end of the year. So 790 here at the bottom. Vehicles at cost 400, also at the bottom. Accumulated depreciation 1st November. Oh, I got my dates wrong. October, it should be November, not September. I wrote September here, it should be November. November's the beginning. Okay, how much was it? 204 for vehicles. Vehicles 204. Okay, so 1st November 2013, 204 there, 204 there. Equipment 360. 360 is end of the year. Equipment. Alright, and 97560. 97560 is beginning of the year. Okay, so tick, 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 tick. Okay, bank. Bank credit. Credit means liability. Current liability. Bank overdraft. How much? 2371. Ooh, 2371. 2371. Allowance for credit losses goes against your debtors. So I need, where's my debtors? There's my debtors. I need those two. Okay, so debtors 3,000. 3,000 minus 955, current assets. Debtors 3,000 minus 955. Okay, capital, 1st November, that's opening balance, that's equity. Capital, open brackets. 28238. 238, 123. Okay, that's done. Inventory, 1st November, that's opening stock. I don't show opening stock, I show closing stock. But I'll put inventory here, and I want closing stock. I don't know what it is, but we'll find it just now. Creditors, current liability. Creditors, brackets, how much? 38500. 38500. Drawings. Drawings affects owner's equity, negatively, so minus 8,200. Okay, minus 8,200. Drawings, minus 8,200, that's fine. Stationery is an expense, don't need it for this question. Rent income is an income, don't need it for this question. Mortgage is a liability, do need it for this question.
I thought the stationery is not left.
No, they didn't say stationery on hand, they just said stationery. Stationery on its own is an expense. 870,000. Okay, let's adjust now. Inventory at 31st October, that's easy. 42,000 is your closing stock. Now I can put that in. 42,000. Inventory. Tick. Land and buildings consist of those property. It's not depreciated, that's fine. Just tick. That means nothing. Okay, allowance of credit losses must be adjusted to 1025. That's important because the allowance is currently 955. So we need to increase the allowance by how much? Just work that out quickly. 1025 minus 955 is what?
70.
Is it 70?
Yes.
Okay, so that means you need to add 70 here. Plus 70. Are you sure about that? Just double check. 955 plus 70.
That's what I did.
Okay, 70 is fine. Okay, great. Okay, so tick that. Rent income consists of fixed amounts receivable at the beginning of every month. Rent for October has not been received. Okay, so if it has not been received, it's what? It's an accrued income, and we are looking at the month of October, so we need to add it. Okay, so you've only collected rent for 11 months. Okay, so rent income would be owed to the business, so it would be an accrued income. Accrued rent income. Accrued rent income, 1 month is missing. How much was my rent income? 22,000. Okay, so 22,000 divided by 11 months gives me 1 month that's still being owed. 22,000 divided by 11 is 2,000. So I'm owed 2,000 for this year. It's an accrued income. Tick that. Number 5, depreciation must still be provided for as follows. Equipment, vehicles. Okay, but here they give you a note. On 30 April, an additional vehicle was purchased. Okay, so I'm buying more vehicles. Did I buy any more equipment? No other non-current assets were acquired or disposed of during the year. Okay, so vehicles requires a timeline. Equipment doesn't. Okay, so let's sort out the equipment first because that's easier. Okay, so equipment was held for the full year. They said that you didn't buy any equipment, you only bought a vehicle. So if I ended with 3.6, I would have started with 3.6. Okay, they tell you that you must go 10% per annum, diminishing balance method. Right, so what is the carrying value at the beginning of the year? This minus that gives me the carrying value. The depreciation is going to be 262440 times 10%. Okay, because they said 10% per annum diminishing balance. That's the equipment. Right, so equipment, this times 0.10 gives you 10%. That's the depreciation for the year. Okay, so equipment's done. Vehicles, I need to draw up a timeline. Right, so 1st November 2013 to 31st October 2014. Okay, that's my start, that's my end. Okay, when did I buy more vehicles? 30 April 2014. That would be during the year. 30 April 2014. Okay, so how many months is that? April I don't count, so I would count May, June, July, August, September, October. 6 months. 6 months here. Okay, so 6 months there. November, December, January, February, March, April. 6 months. Okay, so you've got 6 months there, 6 months here. Then you buy new. How much did I buy new? 60,000 new. Okay, and was correctly accounted for in the accounting records of the entity. Okay, correctly accounted for, meaning you've already included it. Okay, so what was my vehicle amount? Here's my vehicle amount. Vehicles were 400,000 at the end of the year. Okay, so end balance was 400,000. Alright, so if I ended with 400 and I bought 60 during the year, I must have started with the difference. Okay, depreciation is on the stuff that you use during the year. Did I use this asset during the year? Yes, for 6 months. Did I use that asset for the year? Yes, for the whole year. Okay, how much am I working this out on? Straight line method, 20% per annum. Okay, so that times 20% is 68,000. That's the depreciation for the year for that asset. Okay, the depreciation for this one is the 60,000 times, what is it, 10%? 20% times 0.2 times 6 over 12. Okay, did I times that by 20%? Yeah, I did. Okay, so those two amounts will give you the total depreciation. Total depreciation would be that plus that, which is 74, which will go here. Okay, so 74,000 depreciation for your vehicles. You got that right?
Yes.
Nice. See, easy, hey? Okay, that's it, that's it. The owner deposit 20 into the bank account of the business as an additional capital contribution. Okay, so additional capital contribution plus 20. Bank's going to go up. Where's bank? Here's bank. Okay, so bank is going to change from an overdraft to a asset. Okay, he's depositing 20,000 into the bank account. The debit entry for this transaction was made correctly. Oh, okay. The debit entry of the transaction was made correctly. So you've captured the bank. Okay, but the credit has not been made. Okay, so all you have to do is just show the plus 20 under capital. Tick. Water and electricity to the amount of 1.5 for October has not yet been paid, accrued expense. How much? 1,500. The total comprehensive income for the year, taking all the above adjustments into account, 32,000. That's easy. Just add that to the capital. Okay, is that it? Yes. Alright, so now wrap up, total up. Okay, so land and buildings, they would have remained the same. Okay, so your cost price here for vehicles, we saw it earlier, was the 34,000. Additions, I bought how much? I bought 60. Okay, no disposals, no disposals, no disposals. Okay, depreciation, no depreciation here. Additions for equipment, no additions for equipment. Okay, so accumulated depreciation here would be 0. Accumulated depreciation here will be what you started with plus what you had during the year. This will be what you started with plus what you had during the year. Okay, so this will be cost minus accumulated, gives me that answer. Cost minus accumulated gives me that answer. Right, cost minus accumulated gives me that answer. Okay, and now I've completed my PPE note for my assets, non-current assets. Okay, I need to pull those figures through here so I can write property, plant and equipment, bracket C note. Okay, and then I would just show the sum of all of them. So I'd literally sum it up. So it equals this plus that gives you that answer.
Are you guys?
So that was the total there. That plus that gives me that amount. Okay. Alright, then I need to just wrap up this bit here, add and subtract all of this, equal that answer. Current is the sum of those three amounts. Okay, there's the current, there's the non-current. Okay, so total assets is non-current plus current, gives me that answer there, total assets. Okay, then at the bottom here, you've got your capital. Capital equals that figure, 870,000 there. Bank overdraft stays here, 38500. Okay, current liabilities is the sum of all of this. Okay, non-current is that. Liabilities would be non-current plus current. Okay, and then we just need to sum up the equity and the liabilities. So total equity and liabilities, okay, equity plus liabilities, okay, equity is that. Okay, that's what you want to see again. Okay, so if you see that, great, no mistakes. And then we're done. Not too bad, right?
No, this
Wasn't bad at all. You probably even got the right answer. Almost.
almost.
One or two silly mistakes.
Yeah.
Nice. Okay, so the last question here is question 4. 25 marks, 30 minutes. Question 4. Question 4. Okay, what is the required ask for? Prepare the income and expenditure statement of Shark Swimming Club for the year ended. Okay, so that's easy. Income and expenditure for the year ended. Okay, so you literally have one heading for income, one heading for expenses, and then surplus or deficits. Okay, remember clubs don't make a profit. Okay, so let's go back and let's get the easy marks. Land and buildings don't need. Equipment don't need. Accumulated depreciation don't need. Vehicles is an asset, negative asset. Next one, accumulated depreciation is a negative asset. Bank debit is an asset. Membership fees received, there we go. First line item. Membership fees, brackets, C working. Okay, membership fees will always have a T account as a working. It's one of those accounts that you just need to draw this up. Membership fees. Okay, so they tell you this is the membership fees received. Just check the amounts though, because there's no lines on here, so I might read it wrong. Just double check. 5270.
Yes.
Okay, so 5270 is what I received. It's income, so that'll go on this side. 5270. Bank would have gone up. Okay, there's the one amount. Alright, salaries and wages. It's an expense, 6,000. Salaries and wages, 6,000. Prepaid booking fees. Okay, it's prepaid booking fees, so we need to look at the booking fees. Booking fees. If it's prepaid, this was prepaid for what year though? This was for 1st of April. That's actually last year. Prepaid booking fees. So I need to look at the booking fees. There's the booking fees. Okay, so this also requires a bit of a working here. You can drop a T account if you want to. It's not going to really matter. It might not for this because it's probably easy, but it's fine. Let's just do it. Prepaid booking fees. Booking fees. Okay, so the booking fees here were 1550. That's an income. So 1550 here. And then they told you this was prepaid booking fees. That was last year's prepayment. So if it's prepaid booking fees, it's a prepaid income. Prepaid income is income received in advance. Okay, so income received in advance last year would be a credit. So I would debit last year and credit this year. So I would credit this year with prepaid booking fees. This was last year, 2014. Okay, the prepaid booking fees 350. Right, membership fees received in advance. Okay, so if it's membership fees received in advance, but bookkeeping fees. What am I saying? Booking fees. Bookkeeping fees. It's not. We're not booking something. It's bookkeeping fees. So it's actually an expense. So a prepaid booking fee would be a asset. So this needs to go on the other side. Okay, this is actually an expense. Bookkeeping fees. Bookkeeping fees. Okay, so if it's a prepaid bookkeeping fee, you've prepaid the expense, so it's an asset. You would credit the asset, you would debit this year, so it'll go off this year. So this also needs to come this side. Okay. Bookkeeping. Prepaid bookkeeping fees. Okay, the membership fees received in advance. Okay, so membership fees received in advance, that's income received in advance. Okay, that's why I went back to check, because normally they use prepaid income. So they didn't use prepaid income, so they're using prepaid for the expenses. Okay, that's why I knew there was something wrong with this bit. Okay, so membership fees received in advance, that was from last year. So there would have been a credit last year. To process it this year, I would debit last year and I would credit this year. So 900 will go this side. Hi, Craig. Prepaid, where was it? Prepaid booking fees, membership fees received in advance. That was a liability from last year. So last year's liability will have a credit, so I debit last year's liability, credit this year. Membership fees received in advance. M fees received in advance. Next, accrued membership fees. Accrued membership fees is something that's outstanding, which is an income. Income that's outstanding is an asset. So this was from last year. So this would have a debit balance. So last year's debit, I would have to credit last year's debit and then debit this year. So accrued membership fees will go this side. Accrued M fees. Accrued M fees was how much here? 620. Okay, insurance is an expense, that just goes here. Insurance brackets, how much? 3,900. Telephone expenses, 3,000. Telephone, 3,000. Okay. Maintenance, 4,900. Maintenance, 4,900. Just read the next one. What is the next one?
Depreciation.
Okay, depreciation is a expense. So depreciation.
9025.
9025. Okay, next.
Painting of swimming pool.
Okay, if you're painting the swimming pool, you're maintaining it. It's an expense. Painting the pool. How much?
1,200.
Okay, next.
Water and electricity.
Water and electricity. How much?
6,500.
Next.
Mortgage.
Liability, don't need.
Yes. Tuck shop sales.
Do need.
Yes.
Tuck shop sales brackets. How much? 83.
Yes.
Next.
Tuck shop inventory.
Okay, so the tuck shop sales needs to work out a gross profit. So I would actually add a line here. Tuck shop gross profit. Okay, tuck shop sales would be a working for this. Then I would less the cost of sales. The cost of sales will be the opening stock, which you've got, is 4,600, plus the tuck shop purchases, which is 1,200. Okay, so that's cost of sales as a separate calculation. Okay, I would show it as a separate working on the face. You can show it separately, doesn't matter as long as you show a working for it. Alright, so that covers all of those line items. That's the easy marks. Okay, we do need to read the first bit here. The Shark Swimming Club came into existence. One of the swimming champions donated 150 with the mission of starting the club. Okay, on 1st April 2013, so that's long ago. That's before this year. 40 members joined the club. Okay, they've given you 200 entrance fees, agreed for 100 Rand for membership fees. During spring, summer, it's used for organizing competitions. And the swimming pool is also used in the public when it starts swimming. Okay, during the tournaments, 2 types of tickets are sold. That's important. Ticket sales. Okay, that's probably something that we also need to look at. Okay, so number 1. During the current year, 25 new members joined the club, and their membership fees were correctly accounted for and included in the total membership fees received. Okay, so that was included here, so that's fine. The bookkeeper, however, forgot to account for entrance fees for okay, so the bookkeeper, however, forgot to account for entrance fees. Okay, so they didn't account for the entrance fees, but they accounted for the membership fees. Okay, so entrance fees, brackets, 25 members times, was the entrance fee 200 Rand? Yes, times 200. Okay. Next. Half of the amount received as entrance fee should be capitalized. So half of it means, half of it must be capitalized, so then minus or times 50%. Okay, you can't show all of it as income. Half of it is capitalized. A swimming tournament was held during September. Records kept for the tournament showed that 180 spectators bought yellow tickets and blue tickets. Okay, so ticket sales, yellow and blue. Ticket sales, brackets, yellow equals
180 times 50.
180 spectators. A yellow ticket is 50 Rand, yes. 180 times 50, yes, plus blue, which is
140 times 200.
Was it 140? Yes, 140 times 200 times 200, close brackets. Okay. Tick. The swimming facility received an amount of 6,000 from the public during the current year for the use thereof. Okay, so that would be a donation. It would be a form of income. Add another line here. Okay, show public donation, brackets, 6,000. Okay, tick. This one. An amount of 100 for booking fees is still payable for the current financial year. Still payable, so we have to add it to the booking fees. Still payable means it's accrued expense. Okay, so accrued expense, 100 Rand. We tick that. Okay, on 31st March, accrued membership fees amounted to 750, while 200 of the membership fees in arrears of 1st April was irrecoverable. Okay, so accrued membership fees for this year is 750. Accrued membership fees is an asset, so debit that, credit this. Accrued M fees, brackets 2015. How much? 750. That goes here. Okay, accrued membership fees. Right, 200 of the membership fees were irrecoverable, so write off the membership fees. So if I write off membership fees, I'm going to debit the credit losses. Okay, write off the membership fees and then credit the membership fees. Okay, because credit losses would have been debited. Okay, how much was it? 200. Okay, the mortgage of 100,000 was acquired by B. The mortgage is repayable in 5 annual installments. Interest on the mortgage is calculated at 15% per annum. We need that. Okay, so the mortgage was 100,000. Yes, it was. Okay, so 100,000 mortgage interest equals 100K times 18%. Was it? 15%. 100,000 times 15%. It's 15,000. Do I have interest here? No, I don't. So I need to put it in. Interest on mortgage, 15,000. I can actually show that's working here. I would show it on the face. Okay, 15,000. Okay. Oh, we also need to check the equal payments. When do we start paying? 30th of September. Oh, that wouldn't matter because I'm not doing the statement of financial position. I'm only looking at income expenses, so ignore the rest. Alright, insurance premium of 300 per month has been paid until end of April. So we've paid for April, we've paid for 1 month. So 100 Rand is prepaid. Take it out. Minus 300. The tuck shop inventory, there's my closing stock. 1,400. Where's my minus cost of sales? There. Minus 1,400. Okay, for cost of sales. Right, so cost of sales is going to equals that. Okay, 4. Alright, so now I can wrap it up and I can look at all these balances. Okay, so tuck shop working. I need to just balance this off. I'm going to have profit and loss. That's the balancing figure. The balancing figure equals the sum of all of this. This minus that. 6.5. 6.5 will go here. Okay, bookkeeping fees. Okay, the bookkeeping fees would the same thing would apply here. I would sum up all of this, and 2,000 would be the profit and loss. Okay, so 2,000 would be, so that goes there, and that goes there. Okay, so the bookkeeping fees, oh, be careful. Bookkeeping fees is an expense, not an asset, not an income. Okay, that's better. Alright, the tuck shop sales was 8300 less the cost of sales. Okay, so the tuck shop gross profit is this minus that. Okay, the entrance fees, let's work that out, equals, okay, the blue tickets and blue tickets and yellow tickets times 50, okay, plus 140 times 200 close brackets, 37,000. Public donation, okay, this didn't change, this did change, this didn't change, this didn't change, neither did that, all that, all that. Okay, so expenses equals sum up all of this. That's my total expenses. And my total income is the sum of all of that. So income minus expenses gives you a surplus for the year. Okay. Right, let me just check if that's correct with my first answer. Which question was this for? 5, no, but different. Okay, what didn't I put in? Okay, membership fees is right, 6.5. Okay, membership fees is fine. Bookkeeping fees is fine. Income, membership fees, tuck shop gross profits. Tuck shop gross profit is fine. Entrance fees, ticket sales. Ticket sales is 3.7, that's fine. 6,000, that's fine. Okay, salaries and wages, insurance, telephone. Oh, where's the 2,000? Oh, bookkeeping fees, there's the bookkeeping fees. Maintenance, depreciation, painting the pool, water and electricity, oh, there's it. Credit losses, I forgot to put that in. It's an expense. Credit losses is an expense, silly mistake. Okay, so NB, that's something to add. Credit losses is an expense. It needs to be included. Okay, so you wrote off 200. That needs to go there. So my expenses are now going to be 200 Rand more. Interest on mortgage. Where's my interest on mortgage? Interest on mortgage was... oh, I've calculated the interest on mortgage incorrectly. I had 15,000 here. Let's go back and read the question. My interest on mortgage here is different. Why is it different? Let's go back and check. Okay, mortgage of 100,000 was acquired from B on 1st October 2013. Let's draw this. Okay, let's redo this mortgage interest calculation.
I said minus 20,000 because if you do 100,000 Rand in 5 equal payments,
yes,
that means there's 20,000 Rand.
Yeah, it could be right. Let's just check. 2013, the mortgage is payable. So this was 31st of March, 2015. So 31st March 2015. Okay, that's the end. Okay, and then obviously the beginning of the year would have been March, April. 1st of April 2014. 2014. Okay, so then 1st October 2013, October 2013 to 1st of April is how many months? That would have been October, November, December, January, February, March. 6 months. 6 months to get from that date to that date, and then 12 months to get to there. Okay, so a mortgage of 100 was acquired on 1st of October, so 1st of October. The mortgage is repayable in 5 equal installments starting on 31st of September 2014. Oh, see, that's during the year. That's why. Okay, I should have drawn a timeline. Normally I would. I think I'm just trying to rush it a bit too much here. Need to slow down a little bit. Okay, so this is 30th of September. 30 September 2014. Okay, this would have been the payments. Alright, so how much would you have paid? 5 equal installments, so you would have paid 20,000. Do you agree?
Yes.
Okay. Interest on the mortgage is calculated at 15% per annum, payable equally in arrears. Okay, so interest is 15%. Okay, so what was this amount here? Where's the mortgage? Here's the mortgage. It was 100,000, but it was 100,000 when? 31 March 2015. Okay, so 2015 was there. Right, so we actually didn't take out a 100,000 Rand loan. The 100,000 Rand loan was a mortgage of 100,000. So that's the current mortgage. That's current. Okay, so currently the mortgage is 100,000. Okay, obviously if you paid off 20,000 there, this would have been 120,000. Okay, right, because you pay there and then you've got 100,000 there. Alright, so how much would you have had there? You would have had 120,000 Rand loan there. Okay, so did you have this loan for the year? No, you had it. Yes, you did. No, you didn't. You only had it for that portion. April to September is how many months? April, May, June, July, August, September. 6 months. Okay, and then you would have had a 100,000 Rand loan for the next 6 months. Okay, so interest here is 120,000 times 15% times 6 over 12. 120,000 times 15% times 6 over 12 is 9,000, and then this is 100,000. 100,000 times 15% times 6 over 12 gives you that. Okay, so total interest is that plus this. Right, so 16,500 would have been the interest that you would have included there. Okay, because that was for annual installments starting on 30th of September. Okay, so that makes more sense. So now we need to put that in here. Alright, so equals 16,500. That would have been delete. Okay, so interest on mortgage, that needs to actually say C working. Okay, because that's what they said. Mortgage of 100 was acquired from B on that date. The mortgage is repayable in 5 equal annual installments starting on that point. Okay, so that's the point that you would have started the payments. The interest on the mortgage is calculated 50% annum, payable in arrears. Okay, so this is when you're going to start paying off the loan. Right, so that's one view. You can view it as that. But the question did say it's a 100,000 rand mortgage acquired on the 1st of October. So the wording's not so great. So was the loan 100,000 or was the loan 120? Then you made a payment. It could be either or. Right, so depending on which way you view it. This is one way of viewing it. Okay, you could have viewed it this way, where you could have said, well, the loan was 100,000 here. Okay, so 100,000 there. And then this would have been 80,000. 80,000 there. For the next 6 months. So then this would have been 100,000 times 15 over 6, 100,000 times 15 over 6. Okay, there's the 100,000 times 15 over 6, and then this is the 80,000. 80,000 times 15 over 6 over 12. Okay, so that was that. So in my first answer, I had that, interest on mortgage, because I used this calculation. Okay. 1 October 13, so I said 100,000 there that we paid here, that gives you 80. Okay, so that was the one scenario interpretation, that was the other scenario. Okay, looking at the mortgage. Okay, it's a bit tricky to interpret what exactly the mortgage is, because they say the installments are going to be payable on the 30th of September 2014. Right, so it's either you made the payment on that date, which this 100,000 that you're seeing here, this 100,000 rand was for that date, 31st of March. But if that's the date for 31st of March, then this means that you've already paid 20,000. Okay, see, it's a bit strange. Okay, because it doesn't, the figures don't tie up fully. Right, because 31st March 2015 is the year end. So if the balance on the loan was 100,000 and you're making a payment on the 31st of September, that's when 5 equal installments starting on that date. Okay, then you would have had this scenario. 100,000 there, then I already paid, meaning that the loan would have been 120,000. Okay, or you could have had this, where the loan was 100,000, and then you're saying that we're going to start paying here, meaning that this loan balance in the question was beginning of the year and not end of the year, as what they said here in the dates, but that wasn't clear in the question. Okay, so the only problem here in this question in terms of interpretation is interest. So this one line item could be 2 different amounts depending on how you've interpreted the question. Okay, I'm going to leave it as the first way, this way that we interpret it. Okay, so let's just draw an arrow there. Okay, and then you had a surplus for the year which was only 2,975. Right, based on that interpretation. Okay, that was the end balance. We had paid 20,000, meaning we would have taken a loan of 120. Okay, save that. Happy.